last week, the markets reacted to weak global cues, selling in banking sector on fears of exposure to housing finance and real estate sector, along with demand conundrums following the downward revision of GDP growth forecast to 6.1% for FY20 by RBI. RBI reduced the repo rates to 25 bps to 5.15%. Its observation of state of economy and its commitment to continue with accommodative stance as long as it is necessary to revive growth gives sufficient indication that central bank is likely to continue with its policy rate cuts ahead. Next week would mark the beginning of Q2 FY20 result season with IndusInd Bank and TCS reporting their results on October 10th, Infosys on October 11th, and Avenue Supermarts on October 12th. We would be keenly watching out for the IT companies' management commentary on various verticals, namely BFSI, telecom, manufacturing, etc., along with their business share and outlook about the digital space. Impact of wage hike, visa cost, and INR depreciation on margins will also be watched out for. Deal pipeline, deal wins, and share of digital in new business would also be monitored for IT companies. Similarly, developments on US-China trade front will also be closely watched out for in wake of resumption of their trade negotiations from October 10th. For this week, we have selected UPL Ltd as our pick of the week. UPL Ltd has wide product basket. It includes herbicides, which contributes around 29% to its top line, fungicides contributing 26%, insecticides 25%, seeds around 9% to its sales, and other products contributes around 11% to its sales. Its product portfolio is present across entire crop protection and seed chain. With its presence across 133 countries, the company sources its revenues from across the globe, with Latin America contributing around 37%, India around 21%, North America around 16%, Europe 11%, and rest of the world contributes 15% to its sales. UPL has been growing inorganically with around 40 acquisitions over last 25 years, and its latest acquisition of Arista Limited for US $4.2 billion makes it fifth largest agrochemical company. Arista's portfolio includes more than 700 biostimulants, innovative nutritions, and biocontrol products. The acquired portfolio of biosolutions and seed treatment product is complementary to that of UPL. Arista brings about distribution network and crop strength, thus making the combined entity a formidable competition across the markets, be it Latin America, North America, or Europe. The portfolio now gets expanded to corn, wheat, rice, fruits and vegetables for entire North American continent, wines, sugar beet, potato, cereals, rapeseed oil in Europe and South Africa, cotton, soybean, corn, citrus, and sugarcane in Latin American continent. Management had expected to achieve revenue synergies to the tune of $100 million and cost synergies of around $80 million for FY20 with Arista's acquisition. The synergies on revenue and cost front have already started to play out right from Q1 FY20. Revenue synergies in Q1 FY20 stood at US $20 million, while cost synergies were reported at US $18.6 million. With the management is quite confident of achieving the synergies at current run rate on back of cross-selling, large sales force, and incentive plans. Hence, we recommend UPL Limited with a buy and price target of 651, giving an upside of 12% from current market price. Thank you.